RSI is one of the most used indicators by traders, yet most of the time it's used incorrectly. Today, we'll be going over 5 things you should know about so that you can use it the correct way. Also, if you're completely new, we'll be going over what the RSI is as well. My name is Richard and welcome to Trading Intel, where we make videos on everything related to trading. Okay, so what is the RSI indicator? The RSI, or Relative Strength Index, is a momentum oscillator. Basically, it shows you the speed at which price changes to give you an indication of whether it's overbought or oversold. Now, it oscillates between the values of 0 and 100, and traditionally, a value that's over 70 is classified as overbought, whereas a reading below 30 is classified as oversold. Now, the number one rule when it comes to using the RSI, and probably the most important rule, is to not use it by itself. Whether you're combining it with price action or other indicators, it's important to use it in conjunction with other technical analysis concepts in order to increase your confidence for your trades. Otherwise, you'll be losing a lot of money if you just base your trades on the RSI alone. Now, the second thing you should know about is that when you first get the RSI onto your charts, it comes with the lines drawn at 70 and 30. Now, a lot of traders will make the mistake of selling when the RSI hits 70 or above and buying when the RSI hits 30 or below. Now, this is a mistake because in a strong trending environment, the market can stay overbought for a very long time or oversold for a very long time. So make sure you stop trading overbought and oversold readings by themselves. Let's take a look at some examples. Now, the third thing you should be aware of is that the RSI also acts as a trend indicator. A lot of people will have a line drawn at the level 50. And when the RSI is above 50, it indicates an uptrend. Whereas when the RSI is under 50, it indicates a downtrend. However, it is important to note that this only applies to the time frame you're looking at. Let's take a look at an example. Now, the fourth thing you should be aware of when it comes to the RSI is that the RSI has a lot of noise. There are a couple ways to remove this. So first of all, you want to go into the settings for the RSI and change the source. So from close, you can select OHLC4. That just means it's going to take the values of the open, high, low, and close of the candle and divide it by 4, giving you an average and plot the RSI that way. The other way to eliminate noise is to actually add on the moving average. And you can do that in the settings as well by going to the Style tab and checking the RSI based MA box here. As you can see, the RSI has a lot of deviations above and below the moving average. So to cut out noise, it's important to look at the overall slope of the moving average and also the direction. Now, the fifth thing you should be aware of is that many traders trade divergences. Now, if you don't know about divergences, I made a video on divergences and I'll link it in the description below. Most traders want to trade the divergences. So if they see a regular bearish divergence, they'll go short. Or if they see a regular bullish divergence, they'll go long. However, you cannot just trade divergences by themselves because, as you can see, a lot of the times the divergence is not confirmed. And if you just enter a trade without the divergence being confirmed either by price action or other indicators, you're going to get wrecked and stopped out, and you're going to lose a lot of money. I'll show you what I mean with some examples. So rather than just trying to go against the flow and look for reversal divergences, you should be looking for continuation divergences and going with the flow and the trend until the price action or other indicators showing you that the trend has reversed and that the reversal divergence is actually confirmed. Now I hope that this video has given you a better understanding of the RSI and how to use it correctly. If you found value out of this video, make sure you hit that like and subscribe to the channel, because the next video I'm going to be doing is on market structure and price action. So I'll see you later.